Hello there, everybody. Carlos Scarpero here, VA Mortgage Specialist with Ross Mortgage and Military Mortgage Boot Camp. Here with an urgent update with regard to mortgage forbearance. If you've been following my videos, I mentioned I had a video a few days ago, Just Say No to Forbearance. There's an update to that story. It's a very fast-moving story. So literally you got to be on your feet on this one. And you can see I'm got my hat hair today since the bar were still not working. So this came from the VA directly, so that's good. It's their direct orders about the forbearance issue. So I want to get this urgent update out to let you know what's going on and my thoughts. So I'm going to go directly to the paperwork just so you can see exactly what's going on here. So give me a quick second. We're going to switch over. I think it's sometimes better just to read it word for word instead of trying to interpret it, and that way we know exactly what's going on. So this is the extended relief under the CARES Act for those affected by COVID-19. And so that's just the very first part of it. It's just giving a little information on what they're doing, who's eligible, and this is for VA only. So I need to clarify this. It's only for VA loans. The FHA conventional loans and everything I said last week, with regard to forbearance and some of the issues surrounding that still apply, but this is for VA only. So keep that in mind when I go through this. So eligibility, and you borrow the VA loan. Forbearance, borrower, and so this is section 3, borrower may request an initial forbearance for up to 180 days, regardless of the borrower's delinquency status. If the borrower makes an attestation discussed above, the servicer, which is a lender, must grant the forbearance request with no additional documentation required. This forbearance must be extended at the borrower's request for an additional period of up to 180 days, so 1 year total. When the borrower contacts the servicer, I love this part because this is one where there's been a lot of issues. When the borrower contacts the servicer, the VA expects the servicer to inform the borrower of the borrower's forbearance rights. Gotta hope so. One area is really bad right now. The borrower, I love this too, looking out for the veterans. The borrower, not the servicer, is entitled to determine the period of the forbearance, subject to a statutory limit of 360 days or 1 year. During a period of forbearance described above, servicers shall not charge fees, penalties, or interest beyond the amounts scheduled or calculated as if the borrower made all contractual payments on time and in full under the terms of the mortgage contract. When reporting information to the credit bureaus, servicers must follow the CARES Act for reporting a borrower's account as current or delinquent. Here's what's really interesting, this exiting forbearance. That's one area that there's a lot of concern about on how that's done and how to do that correctly. Servicers should consider all loss mitigation options. Such loss mitigation options include, and not limited to, repayment plans, loan modifications, streamlined, VA affordable, VA disaster extended. Section B, that's a huge area of concern because the way typically most forbearances work is they require a lump sum payment at the end of it. And this is where I really got concerned and really threw up the red flags on that because, if someone's making that 1, 2, 3, or 4, or 5 months payments they're deferring, and all of a sudden at the end of it, the lender says, oh, well, you owe us $10,000. Well, who the hell's got that? And it becomes a big problem. So I really, really love this section B, on this circular, I'm trying to say. Borrower servicers, or the lender, are not to require a borrower who receives a CARES Act forbearance to make a lump sum payment. Equating to that would have been due if a forbearance was not in effect after the forbearance period ends. However, a lump sum payment is acceptable if it is to be paid back at the end of the loan, or if the borrower opts to make a lump sum payment instead of pursuing the options discussed above. Servicers should review all loan files, blah, blah, blah. Oh, this is another really interesting one, section 6. Except with respect to any vacant or abandoned property, a servicer may not initiate any judicial or non-judicial foreclosure for a period of 60 days beginning on March 18th. So right now they cannot foreclose either. So that's good as well. So there we got. So there we have it. I'm gonna stop the screen share real quick. Give you a couple more thoughts here. So there we have it. So what does that mean? So what it means is that on this forbearance, they can either do a loan mod, or they could put it in the loan, but you have to be really, really careful. With any kind of agreement like this, please read it. Feel free to reach out to me. You got to know what you're doing, though. So my advice is still a little bit like I said before. So I'll switch it from just say no to be careful, because you still need to understand your options. If there's a loan modification, is that payment going to be higher than what you paid before? So they could still say, well, we're going to modify it, and for the next year, you're going to pay a 20% higher payment. So is that something you can afford? Is that something you can really work with? So if you can make your payments, please do. That certainly makes it a lot easier. The other area that was not addressed on this, and I've not seen any guidance on it, is what about refining and making additional purchases? Like I said, most lenders right now that I've talked to are saying, absolutely not. The loan is in forbearance. You cannot refi. You cannot get a new loan. As of right now, that's the policy I'm hearing at my company. So keep that in mind. But I mean, if you truly have problems, at least they're at least attempting to solve it. So my guides to this, I'll say, if you truly have a problem, look at this, but understand what it is. Know your options. Call me if you need me. That's fine. I can certainly help you. And understand what's going on. If you don't need it, I'd still say just make your payments. Just so much simpler. But that's an update. Rules have changed, and I want to make sure that you have the most accurate information as possible. As always, if you have any questions, feel free to give me a call. My number is 937-572-3713. I can also reach us at Scarpero.com. I am licensed in Ohio, Kentucky, and Michigan. If you need those areas, I'd love to talk to you. If you're outside of those areas, I do have loan officers all around the country I work with that are really versed in VA loans, and I'll be happy to talk to you. Talk to you soon.